Most people think money is just something they earn, spend, save, or lose. But modern money is much bigger than that. It is not only personal, it is structural. And once you start seeing the structure, financial life begins looking very different. Money moves through income, debt, banks, payments, prices, credit, habits, expectations, incentives, behavior. And most people are expected to operate inside all of it, without ever being clearly taught how the system actually works. That is where the pressure begins. Not always with one mistake, not always with one bad purchase. Sometimes the pressure begins when people are placed inside systems they were never taught to understand. The paycheck arrives, bills leave, payments continue, prices change. Credit expands, expectations rise, and somehow the whole structure keeps moving, whether people understand it or not. This is Streetwise Wealth Academy. I'm Winston, your synthetic financial educator. This content is educational commentary only and is not personalized financial advice, so always research financial decisions carefully. One of the most important things to understand about modern money is that money is not only a tool, it is also a system. It connects work, banks, debt, consumption, credit, technology, behavior, and time. That means money does not only move through wallets and bank accounts. It moves through incentives. It moves through expectations. It moves through systems designed to encourage certain behaviors repeatedly. And repeated behavior quietly shapes financial life over time. Now, this does not mean the system is evil. That would be too simple. The deeper point is that modern money is complex, and most people are expected to make serious financial decisions before they fully understand that complexity. People are taught how to earn money. They are taught how to spend money. They are usually taught how to pay bills. But very few people are taught how money systems shape behavior underneath the surface. That gap matters enormously. Because when people do not understand the system, they often blame themselves for every pressure they experience. They assume financial stress is purely personal, when often it is also structural. One major part of the system is income. Income matters. Limited income creates real constraints. But income alone does not explain financial stability, because income operates inside a structure of expenses, obligations, behavior, and expectations. A person can earn more money and still feel pressured, not because income is meaningless, but because the structure surrounding that income may expand at the same time. Higher income can create opportunity, but it can also support larger obligations. Another major part of the system is debt. Debt does not only affect money, it affects time. A payment made in the future begins shaping decisions in the present. That is why recurring obligations can quietly reduce flexibility before anything appears broken. This does not mean debt is automatically bad. Debt can be a tool. The issue is understanding what happens when future income becomes increasingly committed before it even arrives. That changes financial life emotionally, because income starts feeling less like freedom and more like maintenance. Another major part of modern money is banking. Banks do not simply store money. They move money, lend money, price risk, collect interest, process payments, and help organize financial activity across the economy. Most people interact with banks constantly without thinking about the deeper structure: deposits, cards, loans, payments, fees, interest, credit systems. All of these connect everyday life to the broader financial system. Another major part of the system is inflation. Inflation is usually described as rising prices, but for everyday life, it is also pressure on behavior. When the cost of basics rises, people must adjust, even if income does not rise with it. That adjustment changes decisions. Groceries feel different. Rent feels different. Transportation feels different, savings feel harder, and over time, inflation can quietly change what stability feels like emotionally. Another part of the system is consumer culture. Consumer culture does not only sell products, it sells expectations. It teaches people what normal should look like, what success should look like, what comfort should feel like, and what being behind should feel like. That matters because expectations influence spending. If upgraded lifestyles are shown constantly, upgraded living can begin to feel standard. And once something feels standard, maintaining it becomes emotionally important. Another part of the system is convenience. Modern life has made spending extremely easy. Tap to pay, one-click ordering, stored cards, automatic renewals, fast delivery, instant financing. Every pause removed makes behavior smoother. But pauses matter. Pauses create reflection. Reflection creates awareness. When spending becomes frictionless, financial behavior can become automatic underneath awareness. Not because people are weak, because human beings naturally adapt to low-friction environments. Another part of the system is attention. Modern platforms compete for attention constantly. Notifications, advertisements, algorithms, entertainment. Shopping platforms, social media, all pulling focus toward engagement. Attention matters because attention shapes desire. What people see repeatedly begins to feel familiar. What feels familiar can begin to feel normal. And what feels normal often begins shaping behavior without being questioned. Another part of the system is repetition. Financial life is rarely shaped by one dramatic event alone. It is usually shaped by repeated behaviors operating quietly across time. Small subscriptions, small payments, small upgrades, small conveniences, small expectations. Individually, many seem harmless, but repeated consistently, they can shape the entire structure of financial life. Another important layer is emotional exhaustion. People do not make financial decisions in perfect conditions. They make decisions while tired, stressed, distracted, overwhelmed, and trying to manage real life. That matters because exhaustion changes behavior. Convenience becomes more attractive, reflection becomes harder. Immediate relief becomes more tempting. And modern systems are very good at meeting emotional needs quickly. Another part of the system is normalization. Human beings normalize almost everything eventually. A payment becomes routine. A subscription becomes invisible. A lifestyle becomes expected. A pressure becomes familiar. And once something becomes familiar enough, people often stop questioning it. That is why invisible systems are so powerful. They do not always feel powerful, they simply feel normal. Now, if you step back, the pattern becomes clearer. Income influences lifestyle. Lifestyle influences obligations. Obligations influence flexibility. Flexibility influences stress. Stress influences behavior. Behavior reinforces the system. That is modern money. Not one isolated decision. Not one simple problem. A connected structure where each part influences the next. This is why financial education has to go deeper than tips. Tips may help, but tips without context can feel incomplete. People need to understand the environment those tips are supposed to work inside, because telling someone to budget without explaining behavior is incomplete. Talking about debt without explaining time is incomplete. Talking about income without explaining structure is incomplete. Talking about saving without explaining pressure is incomplete. The deeper lesson is that money is not only about numbers, it is about systems. It is about how those systems shape choices, emotions, attention, stress, expectations, and behavior over time. And once people understand that, financial life starts making more sense. Now, understanding this should not create fear. Fear usually reduces clarity. The goal is not fear. The goal is perspective. Because perspective changes how financial pressure gets interpreted. Instead of seeing every struggle as personal failure, people can begin noticing the larger patterns operating underneath modern financial life. They can notice recurring obligation systems, convenience systems, attention systems, consumer expectation systems, banking systems, credit systems, behavioral systems, and once those systems become visible, financial life becomes easier to understand. Not instantly, not perfectly, but more clearly than before. That clarity matters, because many people were never taught how modern money actually works. They were expected to use the system before they were ever taught how to see the system. And once people finally begin seeing it, money starts looking different, less random, less mysterious, less purely emotional, more connected, more structural, more understandable. That is the real foundation of financial literacy. Not pretending money is simple, not selling shortcuts, not promising easy answers, but learning to see the systems clearly enough to understand what is happening. Because modern money becomes most powerful when people only experience the pressure, but never understand the structure creating it. And recognizing that structure may be one of the most important forms of financial education many adults never received growing up. That concludes today's lesson. Peace. If this lesson helped you see money a little differently, then stay with the series, because financial understanding is not built from one idea. It is built layer by layer, one system, one pattern, one hidden behavior at a time. This first month is focused on the financial lessons many adults were never properly taught growing up. How money moves, how debt works, how stress builds, how behavior gets shaped, and how modern financial systems quietly influence everyday life. So watch the next lesson when you're ready, and keep building the foundation. This is Streetwise Wealth Academy. I'm Winston. Peace.